Hey everyone, welcome to Breakout Wednesday for the 28th of June 2023. It is currently 3:30 p.m. on the West Coast, 5:30 p.m. on the East Coast. First of all, remember, this is never financial advice. I'm not a financial advisor. This is simply a video blog on how one trader and investor sees a market, and everyone needs to take responsibility for their own decisions. All right, I've missed a few weeks, obviously. I'm sorry about that. I don't have really any excuse other than life's busy, two young kids, bunch of shit going on. And I'm going to do my best. I've told Frank I'm going to do my best to punch these out and not miss any more reps. Okay, went for years and years without missing a week pretty much, rather than Chrissy. But so, I'm going to be back at it. I've certainly been busy working away. I haven't been having a holiday in that sense. It's just hard to find an hour that it takes to really punch this out and do it justice. The market, I got a lot to talk about when it comes to the market, obviously, and need to try and condense this and talk about the most important stuff. But it really is a kind of a two-way market, a bit like last year. Kind of resources and energy were hot. And tech was weak, right? And there was a bull and bear markets going on. At the moment, there's the opposite, okay? For those who have been following, there is a raging bull market going on in tech stocks, okay? I'd say that I'm having a very, very good year in the sense that all my tech trades are winning. I was crapping on for months and months on Breakout Wednesday about these flush outs going on in hack and the NASDAQs and all the tech stocks. Okay, these big fat flush outs here and then big sideways bases, then breakups. And I still think it's probably just getting started. You look at hack, right? It just looks like it wants to fling back up here. And this bottom in action, it was clear for everyone to see, but most people I talked to did not strike and it didn't really pounce on it, even though it was just like scream. The charts were just screaming, right? Go back and listen to a bunch of episodes, right? I crapped on far too much, and I was kind of praying that, not that I really pray, but I was kind of, praying that the market wasn't going to dump another leg down because I was so adamant about the signs that it was giving, okay? And we are just in a raging bull market in tech, okay? And I was chatting to someone the other day saying, "Oh, how bad," and he was telling me how bad the market is. I mean, shit, what market is he looking at? Okay, if you are not doing very, very well right now, you are looking in the wrong spots. 100%, right? You are just not trading the right thing. You just got no idea. You got your head up your ass looking at resource stocks and shit that isn't going up. The stuff that is going up is tech stocks, okay? And so that's where you need to be, and it's where I am, and that's where the focus is. Doesn't mean there's no trades in other sectors, but this is where it's at, okay? Apple, back at all-time highs pretty much. Okay, it's obviously still my biggest position by far. I have not sold a share, okay? Just going to hold it. It's in a raging uptrend and there's absolutely zero reason to sell it. Still in Google, okay? It's having a little pullback right now, but no biggie. Zero shits given. And then there's the trades that I was talking about with NU, okay, where I was hopping in down here at 4.48, which I talked about back then, and it is pretty nearly doubled, okay? It's up at 7.65. There are just these trades out the yin-yang everywhere you look, right? And they're all on the US market pretty much. And so this is why I just don't get why people would only trade the ASX. It's so easy to trade the US market. Every broker offers it. I'm going to crap on a bit today, but I can buy, let's say hypothetically, right? An example. I can buy 100K of Google for $1 commission. $1, right? There's people on the ASX paying hundreds and hundreds of dollars for one-way ticket and a round trip of $200-300. It's crazy, I'm paying $1 to get in Google, $1 to get out of Google. Sometimes it might be a couple bucks. Like, let's say my position on NU, because it's a cheaper stock, I did have to pay a bit of commission, but it wasn't like heaps, and so I just don't see why you wouldn't want to put your money in things that are going up, and right now that's in tech, okay? And so that doesn't mean you have to have a US account, because just by playing the tech ETFs on the ASX, you could be doing super well just by following that, okay? But this is where the money's at right now. So enough on that. Last week, not last week, it's probably 3 weeks ago now, there was a few stocks I crapped on about. VVA, I have got a position in the self-managed super fund, doing a share buyback. Going to be really patient on that sucker. Give that a few years. I'm going to just talk about it every few months. We'll see how it goes. I've got a starter position. I will add to it if I like it and it's just going well and make me money. Another one I talked about the other week, MMS, okay, had a huge breakout. This is just probably the best setup I've seen lately on the ASX. There's nothing about that isn't perfect. Huge sideways base, little pokes its head above it, goes sideways, tightens up. If you put a Bollinger Band on that, it's condensing like nothing else, right? Look at that, that's crazy. And then breaks up on huge volume, massive volume spikes, low volume on the down days, and then bang, okay? Just textbook shit and just a lovely, lovely, lovely setup there, all right? Another one, the zero trade in the, I haven't really talked about it much, but that's the one I was talking about back here at $86. Okay, it's up about, I was up about 40% at one stage. I haven't sold a share, I'm just holding it. I'm going to ride that. That's in a big uptrend now. I'm just going to see how high it can go. So there have been great tech breakouts and moves on the ASX too, okay? But it's all about the tech, okay? And, a few other positions from last week. I didn't actually trade any of these three. SIQ, that would have been good, but I didn't trade it. RWC, faked the shit out. Really, really faked out. I got lucky and didn't trade that. Those two were kind of, one was good, one was bad, but didn't trade those. It was about MMS. So that is that. There's definitely been some fake outs still. And this, if you're trading stuff other than tech, it's still hard going, right? The banks have been going sideways and churning. BH has been churning. A lot of sideways chop. And you can see why, this has been a hard market for many people, but who insist on trading all the stuff that's not going up, okay? But for those who just kind of really focus on the stuff that's in a bull market, then it's been way, way easier going. And I think for me, it's key, just concentrating on what's actually going up and what's working for me, okay? And just compounding and doubling down and tripling down on what's actually working, okay? And so what I wanted to quickly do is just had a guy email me, Ben, who just wants to know what kind of scans I'm doing to find these bases at the moment. One I'm doing at the moment is just going to a classic Darvis scan, okay, and then I'm just going to put this back to normal, 3-3, and then first box, let's just go to market and then NASDAQ, okay, and then do a scan, okay. And so that'll find like a crap load of boxes and bases, okay, and 817, it's way too many boxes, right? So then I'll go in and I'll filter it down. So I filter that down. Let's just look for all of the ones above their 200-day moving average. Let's go to the scan result, and let's go to the one, obviously, I just did then. Let's do that, and that'll filter that to 373 stocks. Now, I'll go back in and do another Darvis scan on that, but I'm just going to look for longer boxes here, okay? So I'll go, say, a top period of 7, bottom period of 4, first box. Then I might increase the value to, say, 100K. And then I'll go to scan results, and then I'll go to the most recent one, and then bang. And that'll give me 218 stocks, right? That's pretty good. I'm happy to scroll through, way more than 218 chart today, but that's pretty manageable, right? I'm just looking for things in uptrends, and I'm doing that on the NASDAQ market, NISI market, ASX market every day, and holy shit, the setups that it finds is crazy, and I'm just really consistent with it, and it'll find a lot of stocks I'm not interested in, but pretty much any stock, so many of these stocks have potential, okay? And then I will spend a lot of time just analyzing which ones I like, figuring out which ones are really in the strongest sector at the moment. So, food and staples, might just leave that because I really want to find the ones in tech. And then I will jump in to their fundamentals, and I'll look at their earnings growth, and I'll look at their revenue growth, and I'll be trying to pair it with stocks that are actually doing something decent in the back end, okay? Doing something behind the scenes of actually making money, printing money, hopefully, and growing, okay? AVGO is a great stock, by the way. And that's really what I'll do. Like, there's a few that came up, like CACC came up in a Darvis box, Okay, sorry, I just went and found it in the Darvis box. And it's, I like these really tight Darvis boxes. And, if I find a setup in a Darvis box that's really tight with good risk reward, I'll then just click into it and I'll just start reading about the stock, and I might get lost in it and spend ages looking in its financials and revenue statements and all that sort of stuff. But I do think it really helps, right? The stocks that break out and never look back, like the NUs of the world, okay? I probably spent 3 hours, I'd say, researching NU before pulling the trigger on it, okay? Looking at its revenue growth, all the stuff happening in South America, listening to podcasts on it, going to Apple Podcasts and Googling, NU Holdings and New Bank and all that stuff, and and then just listening to YouTube podcasts, Apple Podcasts, reading statements on it, all that sort of stuff. Really trying to figure out, is this an exciting company that's actually growing and doing good things and making money, or is it just a dog that might be, doing a cap raise soon, and or just having the sustained moves. What I'm getting at tends to be in stocks that have something going on behind the scenes, okay? Because these are real businesses we're talking about, and pairing the fundamentals with technicals, as far as I'm concerned, is the holy grail. And there's so many technical traders I've met over the last 20 something years that they just don't do that well. Like, they have good results some months and some years, and shit results some months and some years, and they're really up and down, just yo-yoing around. The guys I think that really kind of do well and kick ass, in my opinion anyway, are the ones that combine the two and really have an understanding that anything that they're doing here is actually, these are real companies with real businesses, okay? And I just wouldn't personally have the confidence to hold NU for this long. I haven't sold a share, and I don't plan on selling a share until I'm up way more than I'm currently up, okay? But if I didn't know, jack shit about NU, I probably would have just been selling, like, up here, or just, getting being quite cowardly and selling very quickly. But because I know a lot about the company, I know that Warren Buffett's an investor and really likes the business and the fundamentals, and his team likes it. All that stuff just combines to just give me the minerals to just sit tight and just let it run, okay? And so that's that. So that Dava scan, I'm not going to run through all of those, but I just do that every day on all my charts. I look at that, just endless bases this thing will find. And the whole point of this Dava scan is to find me a lot of bases, okay? Because I just want to scroll through and then find the ones that fit my style and fit my trading plan, okay? So that's that. The other thing is, I had someone ask me about, the way to get into fundamentals because they were interested about it. And obviously, I usually only ever chat about what am I talking about technicals on here, but there's no reason why I can't just quickly go into it. On my Twitter account, I talked the other day, the other month, about 4 books I love. So this is one, okay, this is one, and that's one. Okay, this is probably my favorite. And I think they're really good starting points just to listen to, especially this one actually. The others are kind of harder to get through. This one's really good actually, and just it's just a really good starting point to as a basic understanding of fundamentals. Okay, it's just definitely not living and dying by fundamentals, right? Because I usually call them funnymentals because a lot of it's kind of very, very hard to figure out. But I just think that if you have the chart skills, like so many people listening to this have kick-ass chart skills, okay? They're really, really good at it. But if you've got kick-ass chart skills and you can pick good breakouts from time to time, yet you're failing to kind of get to that point where, you've kind of made a lot of money, then maybe just, I think maybe have a very deep look inside yourself and think, hey, shit, do I need to admit that maybe I'm not doing that well, and should I look outside the box and open my mind to something else? Because so many people are just very close-minded to the whole fundamental thing. But open your mind, have a think about it. But these are really good books to start. Now, the other thing before I piss off is some ideas I'm working on at the moment is the financial sector. Okay, obviously I'm looking for tech stocks breaking out, but why the hell is that happening? 1 second. I'm looking at stocks setting up in the financial sector. Okay. Obviously I'm in NU, which is a financial stock, but it's kind of more like a tech stock in the way it moves and the way it acts, and really it probably should be in the tech sector. But I'm looking at many tech stocks. Okay, I mean bank stocks. We had obviously that mini banking crisis with Silicon Bank and all that crap, and a lot of banks got just accidentally, absolutely spanked. But then we have others that are kind of basing, okay? And we've got JP Morgan, obviously it's a giant, just putting in a magnificent base here, and really potentially benefactor of the whole thing. And I'm watching this guy base away, okay? Yeah, it might come down, flush out a bit, but I'm just looking at this huge resistance here, and then I'm considering really adding that to, a trade and potentially to the long-term portfolio as well. The other thing is that I've got an eye on a lot of the ASX banking stocks too, just because, I know that there's all this cost of living crisis and stuff, but these banks are also, in my opinion, going to be printing money pretty soon because, they're going to be earning a lot more interest, as all these, kind of 1.89%, 2% loans roll over and to go up to 5.5%, 6.5% or whatever. And, I just think these banks, no matter what, they're going to find ways to print money. And so that doesn't mean there's a setup on CBA right now, because it's not. But I'm really just keeping an eye on a lot of these sectors. JPM in that banking sector is really the biggest base I can find right now. There is another one, MCNCA, that I'm watching on the NASDAQ that started forming a nice base and broke out of that. Okay, this is a company that acquired Silicon Bank, by the way, and so Silicon Valley Bank. So if it comes back down to its 200-day, I might be picking some up. But I'm just that's pretty much what I'm working on. Then I'm just working on a lot of tech setups. And to be honest with you, a lot of them are very, very overextended, and there's not that many setups around. There are a few. If you look at Twilio, on the NISI, this isn't a technology stock that's setting up, okay, just a really tight base, huge volume coming in here, and so there are a bunch. But the other thing to talk about before I get out of here is just what I've been doing in the self-managed super fund. I picked up a bit more ResMed the other day, just down here. I think I got about 31.90, something like that. Just I'm hoping it has obviously a move out of this channel and back up. I've bought this so many times over the years, but I just think it's a bit on sale at the moment. It's come down to long-term support, and I got a bit more of it. That's really the only activity in the self-managed super fund. I'm doing this year far, far less than any other year over the last kind of 20. That was one of the first transactions in the self-managed super fund in, I don't really know how long, to be honest, but maybe a month or so. Whereas I used to just be like, some ADD kid just doing a million things at once. And my results are going up, getting better and better the less I do, okay? And so, for example, I just want to show some of my long-term holdings in a US portfolio I've got. Okay, this is just one. Okay, Apple's one. Okay, haven't done anything on that in ages. Just letting it ride. Global Foundries is in there. Google's in there. NU's obviously in there. On Running's in there, and Visa's in there. Okay, there's nothing to be done in any of those. It's just sit back, let it compound, let it go to work for me, and then hunt for for other setups as they come along. And strike. But I'm trying to trade less. If I only have 1 or 2 trades a month, that's totally fine with me right now. Okay, that's it. I will definitely be back next week. Sorry for the break, everyone. Catch up, mate.